All right, Emily. So now for something completely different. Christopher Olson writing in, I can't say enough good things about what you guys and gals do to fulfill your mission at the Motley Fool, but I'll spare that for the time being and pose my question. Christopher, by the way, is at lookfromdownhere without an O on Twitter, at lookfromdown, DWN here. Thank you for writing in, Chris. He says, I've owned a few Chinese companies, Emily, for over 6 months now, rule breaker Rex. I've had a few small charges to my brokerage, citing something about the ADR. This has been for Ichi and Baidu. I do also own Baozun and JD, but can't recall if I've had charges for those as well. Just curious if this is the broker charging me or who's getting this money and why. The charge comes out of my cash in the brokerage account. Thanks. And Fool on. Well, Emily, it was natural for me to turn to you because you know China a lot better than I do, having lived 4 years of your college in Shanghai.
Yes, 4 years.
Yeah. And while I don't think either of us purports to be a specialist on ADRs or charges, I hope you've done a little bit of homework, or maybe you already knew this. Do we have an answer for Chris?
We do. I definitely would not say I'm an expert, but I think I know more than the average investor about investing in ADRs. So I have a short answer and a long answer.
Well, let's start with the acronym American Depositary Receipt.
ADR. So American Depositary Receipt is essentially a slip of paper that you're going to buy from your broker that says, I own X number of shares of a foreign company. Now, this is where the fee comes into play, because by owning this piece of paper, you don't necessarily own the stocks of the company. You own a piece of paper that says you own the stocks of a company.
Okay.
And for all intensive purposes, you own the shares of the company. But what actually is happening is whenever these foreign companies come to the U.S. and list on the U.S. exchanges, they have to use a depositary trust company. And this is the person who's going to be owning the shares and then issuing the ADRs, or the global depositary receipts if you're international.
Okay.
And they sell those to your broker, who then sells them to you.
I'd never known how that worked. I have owned ADRs in the past, but yeah, okay.
And actually what happened, the reason why you're seeing these fees, and there are fees that we don't typically talk about because they're very, very small fees. They usually range between 1 penny to 3 pennies per share of the stock. But if you own 500 shares of a stock and it's 2 cents a share, you're paying $10 a year in these fees. So it's definitely worth mentioning that your broker is not getting this money. This is getting paid to that DTC, the Depository Trust Company, that the ADR is using as the listing company. So it's essentially they're called ADR pass-through fees, which is coming to you from this kind of system in which it's a complicated way of you owning the shares. And what's really interesting is that you can actually pull up the documents and see about how these are changed, because they're not the same for every company. You'll notice that you'll get a fee for each different company that you own, and it might be 1 cent on one company, 3 cents on another company. In the case of Baozun's example, it's 5 cents, so a little bit more expensive there. You can actually go into the SEC's website. They have a search process called EDGAR. You can search for your company, pull up the F6 agreement. This is the listing agreement for the ADR. And if you search through a lot of legalese, it's no fun, I promise you, but I do promise also that it's there. You can search through and you can find the agreement that they made with the bank. So I think I pulled up Baidu here. I think a lot of people own Baidu, so it's a great example. If you go through and search their F6 form, you'll see that they actually have an agreement with the Bank of New York, who is the person who's working as their custodian for this. And their agreement is that they can charge 2 cents per ADR at the end of the year. Baozun's 5 cents per ADR at any one point they choose throughout the year. So it's different for every company. Long story short, it's a legal process that was recently changed in 2008 that allows them to take a little bit % shares of any ADR that you own.
Very well researched, and thank you, Emily. Very thorough.
Long, complicated story, but it's
we like to share this story. It was very well done, and Baozun's trading about $34 a share, so 5 cents on each. I mean, this is really inconsequential for the most part. But Christopher was, I wouldn't say he was troubled, but I would say he was curious. He's wondering, what is that money and where is it going? And you just helped him understand. You helped me understand,
Well, I hope so. If there's any other questions, Christopher, feel free to reach out.
Awesome. Emily Flippen, thank you.
Thank you.